Hey gang, Chuck Barone here, Wednesday, July the 20th, 2022. We're glad you're here. We appreciate your support. You guys have made this channel really take off quick. We couldn't be more grateful for all of your support. Today in the markets, a very weird day today. Stocks rally again. NASDAQ has a very good day today. Looks to me like a bear market rally. It looks to me like this story that easy money is coming soon is affecting the stock market. A lot of people are believing this recession either isn't going to happen or is going to be very short, or they believe this inflation isn't real and the Fed's going to knock it down with another rate increase. You can believe whatever you want, but the evidence says something else. The bond market, St. Jerome obviously in the market again today. The 10-year sitting at 3.03 today. We have a completely inverted yield curve again. In my mind, a sell-off's coming in this bond market, especially in that 10-year note. It's just ridiculously priced. We'll see how the market reacts to the Fed later this month. When they raise that overnight rate 3/4 of a point, that'll bring the overnight rate to about 2.4, roughly 2.35, somewhere in that ballpark. It'd be pretty amazing to have a 2.4 overnight rate and a 3% 10-year rate. It's a pretty narrow spread there, guys. Bond market going to sell off. The dollar rallies today stronger, back up over 107 on the dollar index. The dollar looks strong, but only because other world currencies look weak. A lot of these countries are just not doing much to support their currencies. Japan and the Eurozone being the two biggest offenders. So we'll see what happens. Big day tomorrow. Both of those central banks will be meeting, coming out with new policy on rates. We'll see if they're actually going to do something to fight this inflation off. If they do, then you can see a little bit of a decline coming up in the dollar. If they decide they're not going to fight inflation, you might see the dollar get even a little bit stronger. Now the metals market today, gold and silver down. The strong dollar again putting big pressure on those markets. Gold's just under $1,700 or just under $1,700 per ounce. And I think that might be right. Yeah, $1,700 per ounce. Sorry, knocked my mic off here, guys. And silver coming in at $18.75 per ounce. Keep an eye on the dollar index because that's going to give you the idea of what's going to happen in metals right now. It seems like they're kind of moving in tandem. So when the dollar goes up, metals are down. When the dollar goes down, metals rally. So you can kind of, until we see that change, that's a pretty predictable pattern to follow. Oil markets today down. West Texas crude just under 103. They're talking about less demand for oil. I really don't see that coming. Then now that especially gasoline prices coming down fractionally, I don't see people going to drive less. I just don't see that. Natural gas had another big rally today, up 8.5%. 790 on their bajillion thermal unit price. But natural gas is going to be the one. There's all kind of speculation on what Russia's going to do. We've been hearing a lot of arguments, both sides. I don't know. If you're Putin, what are you going to do? Do you want the revenue from the gas sales, or do you want to punish your enemies? I don't know. I guess it's a 50-50 flip right now. Bitcoin had a small rally today, but still well over $23,000. It looks like it's kind of consolidating gains. I think we might see a little bit of a test of that 22,000 support level before it bounces higher. Bitcoin looks like it's in a pretty good place right now and a chance for a breakout coming up. In news you guys need to hear today, we had two big reports issued today. Mortgage application report fell to its lowest level since the year 2000, literally falling off a cliff. And everybody listening to this show who's watched it before kind of could see this coming. We've been warning you guys and telling you guys this is the reality. Well, now it's being confirmed, and it's not going to get any better anytime soon. Existing home sales report came out today. They dropped about 15%. And this is a lagging indicator. You're going to see this continue to go down as these overpriced houses languish on the market. People can't afford to buy them. This is not a want to. This is a math thing now. So one thing or the other has to give. Either rates have to come down to accommodate these prices, or prices have to come down to accommodate these rates. I really believe it's going to be prices coming down. I don't see rates coming down anytime soon. So I think that there's the decline in the mortgage and the real estate business we've been talking about on this show since day one is starting to gain a little bit of steam now. And before it's all over, houses are going to be affordable for regular working people again. Big correction coming in real estate, guys. Here's their latest. I was talking yesterday about lying liars and the lies they're telling us. Well, here's the latest line of bullshit. People working from home are what drove the big increase in home prices. Okay, that may be true. People working from home, people realizing they didn't need to live in the middle of a big city. They could move someplace a little bit more comfortable, nicer, and still have the same job and still get the same pay. That did move the market a little bit. People were running out of California to Idaho, Arizona, even here in Las Vegas. That was not the main driver of the price boom in real estate. There's no mention at all anywhere of corporate buyers, of all the private equity guys and the hedge funds in the market, the pension funds. No mention of that at all, because you're not supposed to know that's happening. No mention at all the Federal Reserve keeping rates artificially low for so long with mortgage rates under 3% to support these outrageous prices. No mention of any of that. It's the working guy that did it. It's the working people. It's all their fault. And truthfully, God, this is just a play. They're trying to get people back to the office. People want to stay working from home. That's all working together on this stuff, right? Now we got lenders pushing these home equity line of credits. Guys, big caution flag there. These loans typically don't end well. Most people do not pay these loans off by paying money down and paying them off. The way they get paid off is by combining them with an existing first and refinancing this HELOC into their first mortgage. That's the way they typically get paid off. Be very cautious of these loans. They're typically adjustable rate loans with a starter lock rate of, say, 2 years. After that, they start to adjust. They'll give you a fixed rate, but it's pretty high. And it's also, they're making you take big withdrawals. So it used to be back in the day you could get this HELOC and have a checkbook, and if you needed the money, you could write a check for $10,000. Draw on your home equity, great. Nowadays, they don't want that. They want you to take, as soon as the loan gets closed, you have to take an initial draw at that closing, usually a minimum of $75,000. So beware of these HELOC loans, guys. We've been preaching here, try to pay debt down and get out of debt. If you can possibly in any way avoid taking a loan, do it. We don't want to be adding, debt onto the balance books right now. In the latest political nonsense, the Democrats came out and now they're proposing price controls on pharmaceutical drugs. They've tried these price controls in the past, in the 70s. They've been tried around the world with other governments. We already know it absolutely does not work. But they're going to drag all these old ones out to try to let you know they're doing something. So these geniuses who caused this big problem have no idea how to get us out of it, are going to play lip service to it with nonsense like this. Now, guys, get ready. There's going to be constant shocks, bullshit news stories, all designed to distract you from what's important and to confuse you and create uncertainty. Don't let yourself get sucked into this stuff. Focus on what's important right now. What have we been talking about? Save 10% or more of your income if you can. Build up your reserves. Invest your money and spend your money conservatively. Be prepared. This recession that's coming is not going to be a quick one. It's not going to be a simple one. Be prepared. let me ask you a simple question, guys. Who do you think will fare better in this recession? The smart people who are saving money, living below their means, and building reserves, just like we've been practically begging everybody to do since the first show we did, or people who don't? I mean, the answer is pretty obviously people who aren't getting prepared for this recession. Guys, they're dead meat. This recession is continuing to gain steam. I got some notes here. Let me read you some of the interesting stuff I was reading today. PG&E, the power company in California, reports that 1.4 million residential customers are past due on their power bills. 1.4 million people. Credit cards and auto loan delinquencies are rising, and these are not for subprime stuff. These are A-grade borrowers, the top of the line credit people. Even they're having difficulty now paying simple debt, credit cards, car payments. The subprime credit cards, the subprime auto loans, well, those things are already getting smashed to smithereens. It's not going to be a pretty ending for subprime stuff, just like the last recession. Americans now are taking on record levels of debt. They're trying to get through this by taking on more debt. Please, guys, if you can possibly find a way to not add on more debt, don't do it. This is not the time to be, we don't want to create payments. We want to get rid of payments. We want to have more money to save, more money to spend, enjoying our lives, not getting caught in this giant debt trap that goes on and on and on. And right now, we're living in this crazy topsy-turvy world where, okay, let's just look at the last couple of days. Bank companies come out with their profits. Their profits are down pretty dramatically from 25 to 40%. Great news! Wow! Big rally in bank stocks. Netflix comes out with their earnings yesterday. They lose 1 million subscribers. Great news! Wow! Best news Netflix has had in a year. Really? How could losing 1 million subscribers in any way, shape, or form be described as good news? They want to spin this stuff any way they can to get you to take your eye off the ball, guys. And to show you how crazy everything, IBM, International Business Machines, long-established company, comes out with an earnings report. They kill it. They blast Wall Street expectations. Stock tanks. How do you invest in an environment like that? How do you know that the rules that we normally invest by, stocks are earnings driven? Well, if they're not earnings driven anymore, what are they driven by? It's just the craziest stuff that's happening right now. On the inflation front, Canada comes out with their inflation report today, well over 8%. Great Britain comes out with theirs, 9.4%, going up like crazy. We saw our PPI last month, over 11%. We're going to get another inflation report coming up. It's going to be pretty ugly, guys. These inflation numbers are not going down. This is not going to go away with just a wave of a magic wand or a prayer. We're going to have to really go to work and tank this economy to get this demand down. It's just what's going to happen. Do the right thing, guys. Protect yourselves. Save your money. Do the best you can with it. Invest your money conservatively. Know that these markets are going to gyrate all over the place. But the good news is at the end of this recession, at the end of it, because this won't be the end of the world, okay? This is not our Mad Max scenario coming up here. At the end of this recession, there's going to be bargains like crazy. Everything's going to look like it's on sale. Home prices will be down dramatically. Stock prices will be down dramatically. There'll be bargains on everything, guys. So be patient. Do the right thing now for a bigger reward later. That's all we got for today. We really appreciate you watching these videos. We appreciate your support. Of course, hit the like button. Share the videos with your friends and subscribers. Comment and ask your questions in the comment section. We've been getting a ton of those every single day. If you haven't already, subscribe to the channel. And don't forget, ask Chuck Barone at gmail.com for your more complex questions, stuff that you don't want to ask in comments. I've been getting a lot of those in my email. I've been doing my best to try to answer them. I've just been getting so many. I'm going to get to every single one of them. So if you've sent me a question and I haven't gotten to it yet, I apologize humbly, and I will get to that before too long. Guys, I really appreciate your support. Hunker down. Take good care of yourselves, guys, and we'll see you again tomorrow. Thanks.